Hello everyone and welcome to Investing Intel. This is Mahesh Muppadi and today I'll be sharing my perspective on recent market fall. A big question many investors have right now is from what level can we expect the market to reverse or how much further could the market fall before stabilizing. So in this session I'll be sharing a summarized view, not in-depth analysis, so you get a clear picture of what's happening. So we'll look at the global challenges current impacting markets, how India is responding to these challenges, the step being taken to stabilize the economy and boost domestic consumption, and how this connects to India long-term GDP growth vision. This fundamental view will help us understand how to approach investing with confidence even in these uncertain times. So after that, I'll also share a technical outlook highlighting the price level where I expect a possible market reversal. We'll see how these insights can help us identify opportunity both for short term and the long term. So as topic itself explains India's economic resilience, how India stood strong with a global uncertainty and demonstrated a remarkable resilience in 2025. While the country was under external pressure ranging from trade tension to global inflation, there were several positive points and developments provide crucial support to Indian market and positioning the nation for sustainable growth. Yes, India faced 50% tariff. Going ahead, as we see the currency and capital flow, the challenges India is facing is rupee faced a record low of 88.36 against the US dollar due to concern over potential US tariff. Again, from in 1 year, we have seen a strong reduction in FDI inflow, that is reduced to $35 million in May 25, down dramatically from $2.2 billion a year ago. So the decline in foreign investment threatened to stabilize financial market and adding pressure to India's external debt management. India also faced the rising global inflation, where import inflation surged from 1.3% in June 24 to 31.1% in February 25 because of the rising price of precious metals, oils, and India importing 80% of its oil has created a substantial pressure on the fiscal deficit and overall inflation dynamics. But the positive point is India's GDP, which has reaching 7.8% in Q1 financial year of 2025, the highest in 5 quarters and highest among 6 nations. This represents a significant improvement from 6.5% in previous year, demonstrate the economy's underlying strength, maintaining India's position as the fastest growing major economics. Even after the strong GDP result but due to global challenges and FDI outflow, Indian market have also faced a significant decline, as Sensex delivering only 1.9% return in US dollar terms, which is underperformer amongst 17 major global indices. This is also due to the expensive valuation, where Nifty was trading at 19.3 times forward earning. But the DI inflow has cushioned the decline and stabilized the market, which we have not seen that sharp decline because of the DIS. So with a strong GDP growth despite challenges, what we have seen has GDP growth of 7.8%. The major growth is supported by strong domestic demand, with rural consumption picking up, city spending rising, and private investment showing sign of recovery. And the strongest point that India has, that is the demographic dividend, with a median age of 28.8, combined with the second highest saving rate among the major economy, provides a solid foundation for sustained growth. And manufacturing renaissance, that is the growth of the manufacturing and the result of index of industrial production, shows that how the demand is rising in India internally, domestically, that is helping manufacturing sector to grow very strong, which has shown a strong growth of 4.26% in financial year 2024 to 25, substantially higher than the 1.4% recorded in 23-24. Plus, the index of industrial production recorded 3.5% growth in July 25, rising significantly from 1.5% in June. So manufacturing growing by 5.40% year on year. So key sector that is showing strength, that is include base metal, electrical equipment, machinery, and this manufacturing has very much benefited because of the production linked incentive scheme by the government. As the infrastructure is the base for developing economy and for better connectivity, Indian government has also demonstrated unwavering commitment for infrastructure development, where capital spending of around 11.21 lakh crore for infrastructure development, significant investment in urban infrastructure, which is 3.1% of the GDP, and to increase the railway network for faster service and supporting new modernization of train services of over 1,000 stations and expansion of high-speed rail network. Government has invested 2,55,445 crores, and again for development of highway for road connectivity, government has invested around 5.67% of total government budget under Bharat Mala Pariyojana program. This is to create a connectivity and ease of doing business for with better connectivity and faster service, which was required for the development. And as we can see, because of this, the and domestic demand and the consumption in the rural areas, that is increasing, so this connectivity will surely help Indian economy. So the emerging sector and the emerging sector opportunity that we are seeing with related to government spending, that is the renewable energy, which is expected to grow at 15.84% year on year. Plus there is the fintech sector, which is expected to become 2.1 trillion by 2030 from 145.09 billion, where India recorded 185 billion UPI transaction totaling to 260.56 trillion in value. This has shown a rapid adoption of digital payment solution. Plus the healthcare and pharmaceutical continue to show resilience, where the sector expect to reach $320 billion by 2028, which is 10 to 12% CAGR growth. With the economy facing uncertainty, the policy support helped to stabilize the economy and the inflation, where RBI proactive monetary policy has supported growth with cumulative repo rate cut totaling to 100 basis points in 2025, where consumer inflation has remained below target rate for 7 consecutive months, which has provided a room for monetary easing. Again, from the government, that is GST reform, where 75% of rural expenditure now attracting either 0 or 5% GST, up from 56% previously. For this to increase the consumption internal in the economy internally, and with the instability that has been India faced with the global inflation, and also RBI has demonstrated its commitment by stabilizing the rupee by utilizing $7 billion in forex reserves to manage this volatility. Despite global pressure, the rupee has performed better than most Asian currencies, the falling only 1.5% against the US dollar in 2025. So this has maintained the rupee among the least volatile currency globally. So we have seen both the points where the points that with the challenges that India is facing and the steps that India has taken to balance the volatility and the business risk that India might have faced by taking required steps. So in near term challenges and opportunity, though the headwind persists, strong domestic inflow are likely to continue supporting the market, and the upcoming Q2 earnings season is expected to show a gradual improvement, while and the GST rate cut and expectation of monetary easing provide additional policy support for India market to recover. Again, investors should focus on sectors that benefit from domestic growth drivers and government policy support, that is manufacturing, infrastructure, renewable energy and technology sectors. And with this whole macroeconomic points, for investor, the current market correction presents opportunity to build position in fundamentally strong sectors aligned with India's growth story. The combination of policy support, demographic advantage and technological advancement positions India well to navigate current challenges. The key to investment success in this environment lies in focusing on quality companies with strong domestic market position, exporters with geographical diversification, and sector benefiting from government policy support and structural demographic trends. So we are going to see how we can find opportunities technically in quality companies. But this one statement that is from the BNB, that is, in a world of increasing tariffs, India relatively inward focused economy is better positioned compared to more trade dependent nations. So I think so the demand that is generated in India internally will help stabilizing the Indian economy. So this was the whole overview that will help us to understand how we can hold our position in the market, and when we see technicals we can find the near term opportunities with the base that with all these points we can expect Indian market to reverse and recover. We don't with my view, I don't expect that Indian market will fall much from at this level, and it should recover as we see as I show you the technical charts. We'll understand the change in the market behavior and how we can use that opportunity for our near term and also long term investment. So before seeing these technical charts, previously also I have created one analysis video that I'll be tagging to you, that you can check and understand all this level, what have all this I have already explained what all these levels are. So continue to that. So here we applied a VWAP and price was taking support here on this VWAP. If we see a long term, yes, this was the rally, and lowest point of the rally, from where rally started, we marked the VWAP and we saw the one here price took support on this VWAP, and again here also price is taking support here. So going ahead, this was the point where we saw the rally and we marked the VWAP here, and then price is taking support here. So I expect the liquidity to be created at this point, but we didn't create it. We utilized only 20% of our capital for investment, because as we go to a time frame, previously in the previous video I have explained what these points, what these levels are, and this here there was one strong selling supply zone, and see, I always say that levels are created way before any news is pushed to manipulate the market. So if you will see that this was the point where IT news was pumped, and we saw a decline, and again this decline, if you see, so there is a concept that is the 3 drive pattern, 1, 2, 3. And this was the liquidity. This was the liquidity supply, liquidity spike, and whenever such pattern is created, price comes to the starting point of that rally. So because of that, here there was the supply zone, and then IT news was pushed in the market and price fell sharply. So because of that reason, we allocated only 20% of our capital. So now, as you can see, as I already said, that this is the compression zone, and see the price, how price went through this compressed zone, and again if you see, this is also a compressed zone. So what was the point that I was positive about, that market is in an uptrend. I was very much confident that market is in an uptrend. We'll be seeing because market created this higher low and higher high. So this was the point. Okay, because of this, I was very much confident that market is an uptrend. It is not going to fall much, but again, market is supreme. Sometimes our analysis fail, but what we have to wait for is the confirmation. And if we mark this low, we see here one strong support level, and again I was expecting, if market breaks this level, then the next zone is what I was expecting is at 24,144. But today, if we see, the market has reversed and given a very strong strong move and reverse from this point, and again I'll show you the 3 drive pattern that was already created here. So I knew that market is going to reverse from here. 1, 2 and 3, and these are the other compression zone, and see how price rallied into compression zone. But this is here, there is one supply zone which need price. Once price takes this, and again price will come here or here for the demand, and then again it will start its uptrend. So now why I'm going to start allocating, this is my view. You please, this is not a recommendation. You do your analysis. Price, whatever allocation I'll be doing, that will be under very much calculated risk. So do your risk, calculate your risk before investing. So there might be price may fall from this point, directly breaking this level to this. So but looking at the fundamental view that we have seen, I expect around 40% that market will fall from here. So 60% is what I'm expecting market to reverse. So if you see here, the major supply zone is already taken. All this is the compression zone, and mark my point, if price crosses this level, we can see a strong upward rally for in this zone, because market has already taken this level, and here also there is a compression zone. So whatever will happen, if there is again selling is happening and market is negative and market is going to fall, will happen in this zone. Once price crosses this 25,000 level, we can see a very strong, this is my expectation, we can see a strong rally in this zone, that is from 25,000 level to 25,650. So, and as you saw here and here, because this is the compression zone totally, and we'll see that. So let's change this. I'll take this zone till here. So this price has reversed, so we can expect. So summarizing, if price breaks this level, we'll see a demand fall till 24,140. I'm expecting fall till 21,140. Price very see, price has taken a very strong support here and given a good rally today, that is on 1st October, has given a good rally and shown a strong reversal point here. So, and this is the compression zone. If price breaks this level, we saw a strong up movement. Same if we see mid cap, prices took price here, there was a demand zone and price reversed from here. Same with the small cap also. See the momentum here. So my focus will be first mid cap and then small cap if I'm allocating funds. But as we see, a Nifty 50 has given a good reversal today. So if you want to check my previous video, I'll be tagging that to understand what level it was, what level this point where I was expecting a fall from. And yes, there was one liquidity sweep and then price has taken a good fall here, and again this was the level I was expecting where price will be reversing, and same thing happened here also, and again it is taking a good support at this AVWAP. So I would say do your analysis. This is my view, this is how I analyze and take position. I manage risk and increase or reduce the risk in fund allocation with respect to market and its condition. So my expectation is we are, and we, with respect to global challenges, we are somewhere near of the verdict. I expect to resolution. There will be some resolution from these challenges, but overall Indian market is very strong. You can, if with a long-term perspective, you can invest, and if you are trading or doing swing trading or with a short-term perspective, do your research before investing. Don't follow this analysis blindly. There is a risk associated with it. Manage your risk with respect to your fund and your risk taking capacity. Thank you.